Hi, welcome to today's market alert for Wednesday, the 29th of October 2014. And yesterday was an interesting day. We started off with the market. I'll just move this forward for a second. So we started off with the markets giving a potential sell signal right off the start there at 1:30, and then we see this removed immediately by the following bar. So this is an unqualified sell signal for the first trade of yesterday. As I said in yesterday's market alert, we had the high impact news item for the consumer confidence figures for the US, which, just to have a look here, you can see that they actually came out at 94.5. Forecast was 87.4 and the previous was 89. So the figures came out higher than expected as well. But this is what this red vertical line on the chart is there for, is to alert you that there is the news going to be released. It's a high impact news item and there could be issues, i.e. the market could be volatile. And it could also be volatile beforehand as well, which is exactly what we saw. However, that said, had you have taken the trades initially and ignored the news, let's go with that, then you can see how volatile the market is already. It's up and down before the news is released. And you can see there that we now have a buy signal right before the release of the economic news. So let's work on the basis that you took the trades. High impact news items you are to generally stand aside depending on the sort of high impact news item it is. And this one, consumer confidence, is not really too bad of a one, but again, if you're new to trading, you may want to stand aside until the news is taken out of the market, until you develop that sort of skill of reading the market and what you could expect from each individual type of high impact news item. The good thing about trading the Dow is that 90% of all of the economic news is out beforehand, which you can see here. But there is the odd one that comes out at 3 o'clock, or at the moment as we're in between clocks changing here in the UK and in the US, it's 2 p.m. news item. So you can see there we've got this volatility beforehand, and then you can see the market still oscillating. Then we get a sell signal. Now this is right on the news, but again, let's work on the basis that you had traded through the news. You can see there now that this short has taken out the long. We've got the entry there for the buy side, then the market turns around, puts in a sell and goes short. This is on the release of the economic news item. This is why I'm showing you this, show you exactly what happens with the high impact news item should you want to actually trade them. So the market now gives you an 11-point loss, and the news is now being factored into the market, and we have a potential buy signal and an unqualified, two unqualified signals now. Again, volatility of the market factoring in the economic news. It's come out higher than forecast, and as I said in yesterday's market alert, if it comes out higher than forecast, you can expect the market to move higher, but not until the market's generally tested. And again, just to reiterate this point, the background of the market, the daily chart, I keep banging on about this, the daily chart is to the buy side, not the sell side. However, that said, if you want to take the shorts, they are short-term gains. And there you can see this one here moving lower and trading down to the support down at 16,850. Watch this. These psychological round numbers, big round numbers they're also called, are amazing. You watch the market play with these areas. So if you are short and you take this sell signal, you've got to look at where the market is heading and where the scalp is just below. So at the low of this bar here, if we just come back a bit, you can see there we're around 14 points and we're just below the 16,850 there, but the market doesn't want to go below it. We see the buying coming into the market here as well. and then we see the market coming back through the entry price to the previous day's high. It's struggling, and then it comes back and has another look at the 16,865 there. Sorry, the 16,850 psychological level, and then trades back up towards the entry price, and now we are above the previous day's high. We're back above this, so we've achieved the objective, which is what the pros do. They like to shake out the weak longs, send people short, and if you don't look at this information here, then you are stuck in a situation of trading back to the stop loss, which we'll see is hit there. But being aware of these areas and understanding how the market works, you can actually make a decision to say, it's not closing through here, I can move the stop in tighter if you wish, and if not, if you just take what's in the software, well, there is a 14-point loss there. That's it. Losses are part of trading. There's no escaping from them. You take them on the chin and you move on, because as I've said in the market alert before, that if you get a few losses at the beginning of the session, you are likely to make it up throughout the rest of the session. If you've already made a lot of points at the beginning of a session, don't bother to trade the signals at the end of the session. So this is a prime example of what I've spoken of before, and that is we've got a few losers. That's if you'd have traded through the news. If you traded through the news, that is a high impact news item, then this is what you can be subjected to. So the market then takes out that trade. We're stuck in this 50-point range. We've got the grey psychological level here and here, the big round numbers. This market's barely traded 40 points in the first hour, 2 hours of the session. So the market's undecided, the volume is low, nobody's around. So we see the market trading sideways to lower, and then eventually we get a buy signal coming in. We're above the psychological level of 16,850, and the scalp target is below the 16,900. So let's see if the market can actually trade up to the scalp and beyond, where we have the next psychological level. So the market is filled at 16,877. It still doesn't want to go up. It struggles in this first bar. The order is filled, it comes back, but look, we're sitting on the high of the previous day, and then eventually the market starts to move high. We've got resistance to the left here as well. This is where we saw this slight pullback in the market, so again we must take note of these things. Back to the entry price, which is now becoming a support for this market until we get this shakeout. Let's just test the resolve of those that have been in the market from the beginning and taken the losses. How much more pressure can they take? Do they have the mental facility to actually be a trader? And there we see a potential sell signal, which is cancelled as the market then starts to move back to the upside again, sitting above the entry price. Notice in this price bar too that the market shook out and came back. The volume is the highest volume we've seen in the previous bars, so we are seeing some buying coming into this market. We get another potential sell, but the market wants to go higher. The consumer confidence index is higher than forecast. That's a bullish signal for this market. It doesn't want to go down now. It's moved down and tested the 16,850, and now we see the market stuck again at the R1, and eventually we see the market hit the scalp. We have the resistance here with the psychological resistance. It's worth waiting to see if the market's going to hit this, even though the scalp has been hit, because the market loves these psychological levels. So we've reached the point where we need to make a decision. Are we going to take the profits, or are we going to move the stop to break even and see what happens? What I would suggest you do is just go back and look at yesterday's market alert, where we looked at the daily chart, and you will see that I marked up the next upside targets. As I keep saying, the long side has been and will be, until the market goes back to the all-time highs following this correction, the best side. So if there is a chance or the odds stacked in your favor of trailing the stop and maximizing your profits, it's going to be on the buy side and not on the sell side. That's why we look at the daily chart, and that's why I marked up the upside targets for you yesterday. So we're at the 20-point scalp. We can either take the profits or we can hang in there, move the stop to break even, and see what happens. So you will see me move the stop as we move this video forward. I know we have the psychological level above there at 16,900, but this market loves resistance levels, and it also likes to take them out, and it's got to take them out to go on to hit the targets inside of the daily chart as well. So let me just move this forward slightly. There you can see I've put in 100% extension below this bar. It hasn't closed above the scalp figure just yet, but I just wanted to get an idea of where we were and see if we were anywhere near the situation where we could move the stop to break even, on the basis this market would break through this psychological level because of what is in the background of the market. And this is something I can't emphasize enough. Many years ago I met a wonderful trader by the name of Tom Williams, who's now in his 80s, and he taught me to read volume in the market. But he impressed upon me how important it is to actually know where you are in the bigger picture, and if you're going to trade something like a 5-minute chart. If you know the background of a market, you can trade the smaller time frames. And again, I know I keep laboring this point, but it is so important that you know where the background is, where the market's trading in the daily chart. And we know that the market is putting in that sort of V-shaped correction. So if there's going to be any chance of making money on an intraday basis, it's going to be on the upside. So when we get a scalp situation like this, and in particular where we've had the market tested as well down at the 16,850 area early on in the session, where it wouldn't, the short trade wouldn't actually penetrate this, then there's every chance that the odds are stacked in the favor of the market actually breaking through the 16,900. And that's precisely what we see the market do for the duration of this trading session. So you can see there we get the odd sell signal coming in, and again, because of the background of the market, i.e. it's a buyer's market, we see these signals failing. So you can see there this one taken out, the market then continuing higher. We've gone through the big round number there of 16,900, and we are continuing to move higher there through the 16,950 and also the resistance 2 as well. And you will see this confirmed as buying as well. Green bar, high volume. This is what's required to drive through these psychological levels. And once the market gets this momentum, that's precisely what it does. We have some potential weakness, and that again is taken out. You'll see the market move higher through this. And that's because what you've got in this situation is people trying to go short or taking profits, and then the market will resume its direction. We see the buying again, more potential weakness. The weakness is absorbed, and you see the market moving higher again. And look where we trade to, the next psychological level there. And if we just go to the daily chart, you'll see why the market's stopping in this area. So here you see the line that we drew in yesterday in anticipation that the market would trade up to this psychological level. This is where the previous selling was, and this is where the market's driven up to the high of this bar. So again, let's just go back to the video for yesterday's trades. So you see the market trading up towards that 17,000 level, and again we get a sell signal that fails. And look where the market goes to before the end of the trading session. It's sitting right on that 17,000 level and playing with the there we go, playing with the 17,003 level that we saw in the daily chart that we drew up in yesterday's market alert in anticipation of this of what we see in the background. That is that this market is heading back towards the all-time highs. Right, let's have a look at the daily chart and see where we are in the bigger picture. As I've just mentioned, this is so important. You can see that the market is struggling now with 17,000. That's the psychological level as we head back through this. We've got 1701 all the way back up towards the all-time highs there. So let's just have a look. We've got resistance here. There's certainly resistance here and here, and then we go back to the all-time high just up here. Now all of these areas, all of these highs of each of these individual bars is going to be a resistance area, and you can see this as we've come through these areas here. You can see how the market stopped at these areas, and then once it got through, it continued to drive through. So they are very, very important areas, and this is again another tool, very powerful tool that you can use in order to stay in trades in the longer term because of what's actually in the background there. Okay, let's have a quick look, see what news we've got today, and there's nothing out at 2 p.m, so that's good. So the first part of the session. However, you've got to keep this in mind today. This pattern that we get with the FOMC, if you're new to this, let me just explain something. Every month the Federal Open Market Committee announce what they're going to do with interest rates and QE and all the rest of it. Never watch it, there's no point. So Yellen is going to speak at 6 p.m. Now the market is going to do one or two things beforehand, and generally it's either or. You will get a good move to the upside, and it will stay that way until Yellen speaks. Otherwise, the market will be sideways. Now, which it's going to be, I don't know. So that's the pattern based upon the last 20 odd years of watching and waiting for the FOMC statement. That's how the market actually will play this out. It generally trades sideways to lower, or it will make a move towards the upside if some sort of news is leaked or information is leaked that they're going to continue printing money or they're going to taper, whatever it is. That's generally what you get. Now, you don't want to be in the market at 6 p.m. because there is a lot of volatility when Yellen starts to speak about how she's going to keep this Ponzi scheme alive that's funded by taxpayers' money, effectively. So, forewarned is forearmed. Don't be in the market at 6 p.m. What the market decides to do beforehand, like I say, it'll either trade sideways and be painfully quiet, or it will move in one direction. Generally, it has been the case during certainly the last 6 years of QE to the upside beforehand, and that you generally find out that somebody had some information beforehand that allowed the market to move in that direction. Now, should the market move higher after, you can see you've got all of your potential profit targets there in the daily chart of where the market's likely to trade to as well. Again, so using this information, if you are a buyer of the market and the signal is provided, is qualified, and then you get to the scalp, again you can make a judgment based upon what's in the daily chart of the likely target it is going to trade to. Right, quick look at the implied volatility before finishing off. This has dropped markedly over the last 24 hours, down at 11.35. Again, consistent with what we're seeing in the background of this market, i.e. it's a bullish market. So you can see there the froth is certainly evaporating in the options market. The options are becoming a lot cheaper. Again, this is indicative of the market continuing to move higher in the background. Right, well that's it from me today. A bit of a lengthy one, but a lot of important information to impart with regards to what happened during yesterday. That's it from me. See you in tomorrow's edition. As ever, thank you for your support. It's very much appreciated, and also the very kind emails that I've received as well. It's very, very much appreciated. I will speak to you tomorrow. Have a good day, and see you in the next one.